Okay, we are recording now. Hey, Renee.
Hey, how are you, Amy?
Hey, I'm doing great. It's Friday, and
Yeah.
tomorrow starts football, doesn't it? I saw your
Yes.
Facebook
So
post.
excited. I'm so ready.
You love Alabama football, don't you?
I do. I do. I've always loved it, but then my daughter
Mhm.
went to school there and we had season tickets for 4 years and that just did it. So
Oh,
yeah,
wow. Wow. I didn't know your
loved it.
daughter went there.
It
That's
was an
wonderful.
amazing 4 years.
Awesome. Awesome. And you
Yeah.
have season tickets too. Yeah. Well, I'm an Auburn fan. Sorry.
Hey, I'm not one of those fans that bash Auburn or none of
I
that. So
know. I know.
I
I
just
know.
don't. I do if I do,
But
it's
I know
all in
people
fun,
like
but
that. They're very much into that, but I went to Auburn for a while, and it's always been
okay.
great.
All right, there's nothing wrong with that.
All right, we're going to jump into today. We're going to be talking about new construction, about building a house or buying a new construction house. We're particularly going to be talking about the incentives that Louder New Homes has right now because Guild Mortgage is one of the preferred lenders for Louder.
Yes, ma'am.
And I've always thought it would be fun. I know it's probably stressful, but fun to build a new house. I mean, it's kind of like buying a brand new car. Nobody's ever owned it before.
You're right. Yes, for
And a
sure.
few weeks ago, all of us agents at Next Generation, we went out to Hedgefield and we got to see their model home and got to take a look at one that was being built, and it was really great experience. And they've got some gorgeous homes available out there. So I don't want to do a full webinar today on the whole new construction process. We're going to plan one later, and we'll get Chanel on here because she used to be a builder's rep,
Oh,
and
wow.
yeah, so we'll do another one later, but because today we're just going to talk about the loan program.
Okay.
Exactly, how does that work? Because it is, a little bit different now. So, you want to just kind of jump in and get us started?
Yes, ma'am. I sure will, Amy. Thank you. Um, Louder is offering a 2% incentive, 2% of the loan amount towards the money can go towards closing costs, prepaids, or it can go to buying your rate down. If you use it to buy your rate down, of course, you've still got to have the funds for all the closing costs as well. So
Right.
we just look at each situation and see where it would benefit the client the most. And that's what we use it for. But the one we're doing currently, I mean, he's got right at $7,000 going toward his costs. So he's a veteran,
Wow.
and yes,
Hmm.
so we're doing a VA loan. He's a veteran, so he hardly has to bring. Is bringing less than $500. So if you
Wow,
have
that's
100%,
that's fantastic to get into a brand new home.
yes.
With a Louder given a 2% incentive. And like you said, that could be used towards their closing costs or it could be used to buy points. So,
Mhm.
how about we kind of explain what points are? Because
Okay,
that can
certainly.
be a little bit confusing.
Okay, yes. Points are used to buy down your interest rate. So, as a lender, when we look at our rate sheet, it tells us each day, the rate and how much that rate costs that day. Okay,
Hmm.
so if you get a rate with no points, meaning it doesn't cost you anything to buy that rate, to
Hmm.
lock in that rate will be higher because it doesn't cost money.
Right.
So if you're looking for a lower rate, it's not that you can't get it, it's just that it's going to cost you money. And that is what points are. Points are the cost of that interest rate. So the lower the rate, the higher the points and the cost,
Hmm.
you know. So we just kind of compare and we'll show our buyer, okay, this is the rate with no points. This is how much money it's saving you in your cost. Here is the rate with 1 point or 2 point or whatever they're asking for. Here's how much that will cost you. And then I will usually do a comparison and tell them how long it will take for them to recuperate that money that they've used to buy it down with. And if
Oh,
it just each person's different because if they're only
mhm.
going to be there 2 years, 3 years, why spend $7,000 to buy down an interest rate? You're never going to recoup those funds. In this particular situation on this gentleman, it would have taken him over almost 6 to 7 years to recuperate if he bought the rate down for, down to in the fours. And he said, at this moment, it wasn't beneficial for him. But we provide all of those numbers so that they can make the right choice for their particular situation. Because everyone is totally different,
And so 1 point is 1% of the purchase price, correct?
1% of the loan amount, yes, ma'am.
Or loan amount, rather.
Yes.
The loan amount. Let me correct that.
And that is not including the rest of the closing costs. That points are just what the interest rate cost.
Right.
So you still have all the other costs. It's not that that's just the only cost. So some people get confused there. So that's why I wanted to clarify.
And 1 point will buy down the rate how much?
Oh gosh, that's not a simple question. It depends. The rate sheet is different every single day. There's no set amount. There's no set amount. It just really isn't, because that's just the way rates are running these days. It's very hard to say that. Usually I would say sometimes around 0.25%, but it could differ from day to day.
I think that's what they were teaching us when I was taking real estate classes. It was about 0.25%.
Kind of, but yes. Yes.
So 2 points could kind of be maybe 0.5% lower rate.
Yeah, sometimes. Yes. 2 points, which again, if you're talking about a $300,000 loan and you're talking about $6,000 just to buy that interest rate, I run the payment and tell them the difference in the payment and how long it will take them to recuperate that. And again, their life goal or their goal, if it's to move in 3 to 5 years, they're never going to make that money back.
Right.
So you see what I'm saying? So that's why we
like about you. Yeah, you look at all these scenarios. And like I can
all these
questions. My own experience of refinancing, looking at all the scenarios. And actually, I happened to come across our paperwork earlier. I wasn't even looking at it before. I was looking for something else. And I knew I had bought points, and we had bought 1.25 points when we refinanced last year.
Yes. And again, each person, it depends. That's why we ask these questions and get in depth with them about what are your plans? Is this your lifelong home? Do you plan on being there forever? Then yes. I mean, if so, then it would save you thousands of dollars over those years in the long run. But if you're going to move, your plan or your goal is to move in 3 to 5 years, you will never make that money back. So is it worth it to you to spend that money now to buy it down? Or could you use that money for something more beneficial? It just depends. Like I said, every single person's different.
Right. Every family, every situation is going to be different.
Correct.
And what's going to make the most sense for one. So it's really hard to give that kind of information. People ask us when they call us.
Right.
Ask us all these questions, ask, how much is my payment going to be? Well, I don't know. We're going to talk to a lender. I don't know what your credit score actually is or this or that. We can go online. We can look at calculators and get an idea.
Right.
Exactly going to be, no, we can't come up with that. Okay. So tell us about the builder rate lock.
Okay, most definitely. We do have it's called new construction. It's extended lock. It can be used on conventional, FHA, VA, and USDA. We have options for 4 months, 6 months, 9 months, and 12 months locks. We do have an upfront fee of 1% when you lock. That fee typically, well, not typically, it will be at closing. You do get full credit back for the fee on our builder lock program, which with my experience, most lenders, you're paying that just to lock the rate. You do not get it back at all towards your cost at the end. So our particular program, when you get to the closing table, you're going to get a full credit back for that. Now, of course, if you don't close for any reason, you don't get it back. Because so yes, that is a huge benefit to our extended builder program. So you also, what's cool is you have a free float down option, 15 to 30 days prior to closing. So if you get ready, if your 30 days are in from closing and the rates are lower, we look at what the current market rate is that day and we can float it down for you to that rate. At no cost to you. Yes. And that's a lot of people's concern. What happens if rates go down? you know,
Yes.
and that's always a question. So if they do go down and and we look at it within that 30 days, then we can float it down for you at no cost to you.
That's the
So
best of both worlds because we all
yeah,
want that because you can lock in your rate, especially if you're
Mhm.
worried about the volatility of the rates. But you've
Yeah,
also got the flexibility that if it's getting, you're almost at the finish line on closing on this house and rates have come down, then you'll be able to get that lower rate. That would reassure
exactly.
a lot of people.
It is an excellent program. It really is.
Yeah, I
And
think
we're
that.
doing quite a lot of that right now.
Yeah,
So
I
just
bet you
because it
are.
gives people, yeah, it gives people that peace of mind. Like you said, the market's so volatile. Gosh, from day to day, we don't know what it's doing. It's up and down. It's all over the place. So giving people that peace of mind that in 4 months they're locked in. If the rate's better, then they can float down. Is a huge factor. So, um, and I'm trying to think, there was something else
I
on the
forgot
tip
to
of
throw
my
that
tongue.
up there earlier. The rate lock program is the 1% of the loan, correct?
Correct. Yes, ma'am. Yes,
Yeah,
ma'am.
I
That's
meant to put that
exactly
up there
right.
earlier. Then we
It's
get
paid
to talk, I
at
get
the time
listening.
of lock. Yeah, it's paid at the
Yes.
time of lock. So, but yes, that is, you get full credit for that back at closing on our program. So,
That's great. That's great. And I would
mhm.
encourage anybody, if you do have the funds to do that, to definitely go ahead and do that, especially since you can do
Right.
the rate float down.
Exactly.
And the time frame, is there any difference in price on the time frame? Because I mean, you mentioned different like 6, 9, 12 months.
There's adjustments to it. It typically, the one I did for 120 days, it was 3/8 added to the points or to the cost, not the rate itself, but added to
Mhm.
the cost of the rate.
Okay.
So if you lock in for less time, it's less. If you lock in for more
Mhm.
time, it's more. But that's not you don't pay that until the end, at the table. Whereas the 1% actual lock fee for this program is due at the time of lock.
Right. And if someone's going to build a house, and let's say they're going to buy one that has not been started at all, they will be looking at probably 6 to 9 months, maybe even up to 12 months for it to
Correct.
be completed. Whereas there are homes, at Louder and some of the other ones that are already under construction and may
Mhm.
have been under contract, but may have come back on the market or whatever. So they're partially done. So it could be, 3 to 6 months.
Right,
But
exactly.
either way, it's gonna be a little bit of time.
Yes, most definitely, most definitely.
Mhm,
So yeah, I mean, depending on what house they choose or find or what the situation
mhm,
is, we look at it at that point. And say for instance, if it's 90 days are in, we can do just a regular 90-day lock. You don't
mhm.
necessarily have to do this because if you just do a 90-day lock, you don't have to pay the 1%.
Okay, gotcha.
So you see what I'm saying? So if somebody doesn't have that 1% to pay right now and they're within 90 days, or even if they're 120 days and they're willing to take that risk, they can lock for 90 and we can extend it for another 30
Mhm,
at the same cost as the other, which is 3/8%. But
mhm.
it just saves them from paying the 1% up front if they don't have it. The only difference is you wouldn't have a float down option.
Okay, gotcha.
You see what I'm saying? So yeah. So,
Now let's say somebody already owns their own land. There we go. Let's say somebody owns their own land and they just want to build a house. They're not looking at purchasing a subdivision or anything like that. Can you assist with that?
typically, how that works is we do not actually do construction loans where you make your draws
Okay.
and that kind of thing. However,
Yes.
how
Mhm,
that works is we have a lot of great banks or credit unions around that do
mhm,
construction loans. So we go ahead and approve the person up front for the maximum amount or whatever they're looking at.
mhm,
Then, of course, they'll go to their bank or credit union to get a construction loan. That bank or
mhm,
credit union is going to want our pre approval letter so that they can have it in their
mhm.
file to show that buyer has already been approved for their permanent financing.
So
So
this is a double close type of situation,
it
right?
is, it is, it is. So, they'll go ahead and do that part with the bank or credit union. They will have an appraisal done based on their plans and specs.
Mhm,
And go from there with the bank or credit union. Our pre-approval letter is good for 120 days because a credit report is good for only 120 days. So
Okay.
at the end of that, we make sure our buyers are, they know, don't open up any new debt unless it's
Yes.
a must. Don't we give them the do's and don'ts, because you've got that time frame where things can change a lot. So once that 120 days is close to being up, we go ahead and get their permission to pull in a new credit report, update the pre-approval, and send it to their bank or credit union that's doing their construction loan. And then we're just kind of over here sitting here waiting for them to be done so that we can go in and close on their permanent financing.
Okay. All right. Gotcha. And if someone buys a home with Louder, for instance, and that's just a single close at the end, right? Not a double close.
Right. Correct. That's exactly right. Because in those cases, you don't have to have that construction on. Your builders handling that part for you.
Gotcha. All right. Well, can you think of anything else? Now this program with Louder is good through September 30th. If anybody wants a flyer, I can send it to you, because it's just kind of funny. Renee and I were talking about this earlier. Let me see if I can make it share this. I could not get this to rotate. I tried, and it won't rotate. I'm like, Adobe Nitro, why are you doing this to me today? So if you want to turn your head sideways and read it like that, you can.
And I can send it to them as well.
Yes.
So either one of us can get it to you.
Yeah, so if that's something that you're thinking about doing, put us back. There we go. So if you are thinking about buying a new home, new construction, give me or Dallas or another realtor with Next Generation a call, and we will get you with Renee and get you approved. And here's the big thing is, don't go out to the site. Don't go out to the builder without your agent, because you'll probably be signed in. Right. And not now, every builder is different, but I know when we were out there at Louder, the representative there basically said that you're not going to get a better deal coming without an agent. And she told us the Louder agents are not paid any extra, so it's really in a buyer's best interest to have a realtor to represent them, because the builder agent is going to have to represent the builder first and put their interest
right first. Most definitely. You definitely need somebody as a buyer to protect your interest, and bring things to your attention that you wouldn't know to ask about or to do if you don't have somebody that's representing you and looking out for your best interest.
And just to walk the journey with you. Yes, to walk the journey with you, just like if you were buying a resale house. We don't call them a used house, a resale house.
Right. Pre-loved.
New cars,
pre-loved home.
Used houses, I don't know. Used house. It don't sound right.
No, that's why I say pre-loved.
Pre-loved, yes. But yeah, so if you are thinking about that, and you're just out riding around on a Saturday, if you go and visit that model home, if you sign in, if they don't ask you about that, if you don't get a chance to put down your agent name, or if you don't have your agent with you, then you will be working with them, and we won't be able to, assist you with anything. But we definitely still get you with Renee, and get that taken care of. But like I said, we'll do another webinar where we do the whole shebang. We just want to keep it shorter and talk about the loans.
Sounds good.
And I have Renee on here a lot because I love Guild Mortgage there, who we used to refinance our home last year. So I just sing their praises, and I've sent a lot of clients to them and to Renee. So you'll definitely be in good hands.
Well, thank you. We try, and same goes back to Amy. I've worked with you for a long time, and I know how much your clients love you and appreciate everything you do for them, and to look out for them and take care of them. So you would definitely be in good hands with Miss Amy.
Thank you. I was looking up your website so I could get your lender number, and I was reading the reviews, and I recognized one of them.
Did you?
Yes. Yes.
I love that. I mean, gosh, that just, I love what I do, and it, when you get something like that, it just, it just warms your heart. You just, just I love helping people. So,
Yes,
so when I
yes,
get
me
good
too.
reviews, it's, I mean, I'll take constructive criticism either way, but
Oh
those
yeah, oh
just,
yeah,
those just make your day.
yeah. Can we just send the constructive criticism in a text or a phone call and let's not
Right.
below or Trust Pilot or whatever review? Okay, but it's all good. We all try really hard. We,
We
we all
do.
try really hard. We really care about our clients.
For sure. For sure.
Yes. Okay, well, I think this wraps it up. If anybody has any questions, see the ticker down there. We've got our phone numbers on there. Give us a call, text, email, smoke signal, whatever. We'll get back to you and help you out. So anyway, hope everybody has a great day. It's good to see you again, Renee. Talk
You
to you
too,
again soon.
Amy.
All
See
right,
ya. Bye bye.
bye.